What's up, YouTube? Welcome to another video. Today's August 19th, 2023. I've been away on vacation the past few weeks. I did pick up some interesting things, but first, quick disclaimer, I'm not a financial advisor. Please do your own research before investing in anything like gold or silver or following any strategies I discuss on this channel. The channel's for entertainment purposes only. If you guys are into gold and silver, investing, personal finance, please like the video, subscribe to the channel, check out my website, My Road to Wealth and Freedom. Link is down below in the description. So first off, some financial commentary. The last 2 weeks, markets really started to kind of roll over and have failed numerous attempts to sort of recover. Bond yields were kind of creeping up. You know, I saw the US 10-year was up around 4.3, 4.28 somewhere. Now it's down about 4.25. Gold is down below 1920. Silver, last I checked, was about 2273. So the metals have been hit. My gold and silver miners have been hit pretty hard, especially Newmont. I see Newmont's it's just breaking down completely. I'm still kind of hanging in there. I think part of the reason had to do with the Newcrest came out with numbers. Of course, Newmont purchased Newcrest. They're going to merge and become the world's largest gold mining company anyway. Newcrest came out. Their numbers were pretty weak, so that's probably influencing the whole Newmont stock as well. But beyond that, just the metal itself is falling. It just feels like there's just so much. Craziness going on in the markets right now, and it's kind of interesting to see what the next couple of weeks gonna bring. Of course, pretty soon we have the BRICS meeting. Whatever they're gonna do with their currencies are gonna be backed by gold or pegged to a basket of commodities. I'm not really sure if that's gonna have a huge impact on the gold market or gold demand or not. My own personal thoughts are that gold in particular, we'll see some positive action on gold the more we see banking crises and stuff like that. As I saw on I think it was my YouTube feed, 700 some US banks are under pressure. Of course, China is collapsing. Their PBOC, the Chinese central bank, came out and started trying to stimulate the economy. Of course, we know what's going on in Japan with the yen. Their currency's sort of breaking down. So just kind of all around, I see Europe's kind of back into focus about energy demand for the winter. There's just kind of a whole cocktail of things that are kind of coming together and creating a giant storm for, I think, this fall. I'll be the first one to admit I'm super surprised that we haven't really seen a lot of pain in any market right now. The housing market there's cracks forming for sure. Every day, every week, I read these reports. My mortgage was $2,500 or $2,200. Now it's $52 or $56. The consumer is struggling. We still have unacceptably high inflation. If you buy groceries, you know what I'm talking about. The price at the pump. I mean, amongst given the inflationary pressures that the consumers are facing, our federal government here in Canada, thank you, Justin Trudeau, decided that now's the perfect time to increase taxes on energy. So electricity, natural gas, the gas you pay at the pump and stuff like that for your vehicles, all gone up. Thank you, JT. You the man. And in the other hand, he's given $500 for people to help him out with groceries. Of course, we don't actually have a positive sort of tax revenue in this country, so it's all basically borrowed on debt. And it's just another thing. What the hell, right? You might as well spend like crazy, just completely screw this country up. And anyways, I don't really want to get too political, but people are really feeling the pressure. People are really getting squeezed out there, and they don't really know if they can hang on any longer. So with yields going up, central banks just can't reverse course yet. Inflation is still unacceptably high. And now that we have higher energy prices, I mean, that's just going to feed into a whole new cycle. Again, that's why I'm happy I stuck with my energy investments, and you know, I think everybody should have a diversified portfolio that includes energy, to say the least, because I don't see it going down anytime soon, and I do think things are kind of at this sort of crossroads. You know, if you're a dividend investor, an income investor, man, I've been looking at, you know, these traditional go-to names for dividend investing, the safe, sort of predictable, you know, earnings, cash flows, the regulated stuff. I'm looking at utilities and pipelines, telecom. I just cannot get over the yields. Like, you know, 5-10 years ago, people would have killed to get these kind of yields. You know, 6 to 8% range is what you're getting on, you know, utilities now. You know, if you go to the Canadian banks, you're looking anywhere between 4 and 6.5, maybe somewhere around there, possibly 7 now. It's been a while since I checked. It's been about a week, and since then they've all come down. So, you know, say 4.5 to 7 range. Again, people would have killed to get those type of yields, you know, just a short while ago. With, you know, the markets are off a little bit. I saw the NASDAQ's off maybe 5-6%. S&P's down maybe 3 or something like that. Hardly anything at all. Hardly anything to talk about, you know, because the real pain is yet to come. The real pain is going to happen when the stock market rolls over and people start panicking and dumping their investments like they did in 2000, like they did in 2008-9. We just haven't seen that relentless punishing day after day, week after week, terrible headlines all the time. You know, every day the market's dropping. It's the past 2 weeks kind of have sort of been that way. But people aren't scared yet. I just don't see anyone scared. You know, they're starting to, but I just don't, you know, people are still fairly bullish, you know, even if stocks are off, you know, 5% or something like that. I mean, people don't care, you know, they start the year down 20 and, you know, now they're up a little bit and they've given back a little bit. Like, we're nowhere kind of near where we need to be anyway for me to get interested in putting some money to work. As long as interest rates are staying this high, I'm content just to park my money in cash and get a 5% plus interest rate on my money versus risking that hard-earned capital in the stock market to get dividend yields of 5 to 7%. It's just, to me, the risk reward is just not there the way it was when we were at 0. What a beautiful number of interest rates, 0%. You know, that made a 5% yield gold, right? But yeah, we're not sort of there yet, and I think inflation's going to be a little bit trickier to kind of get down, even if we do get a huge deflationary wave. There's still the stuff that we need to live every day, the things that we use. You know, I'm talking about energy and agriculture, you know, things like gold and silver, copper, you know, we still need that. There's still lots of demand for that. And so I'm thinking this probably, we're still going to see a lot of inflation, and inflationary periods of the past, inflation came in waves, and it could very well come again. I mean, we're going into this, like, things are so crazy right now. We are on this precipice of a huge collapse in debt markets and everything at the sovereign level. You know, never before has, you know, the entire world been at this point where everybody's in debt up to their eyeballs or more. They're drowning in it, and, you know, their sovereign bond markets are going to collapse, or their currency, you know, takes the hit. It's just really incredible. And, you know, if you live in a country that has a massive property bubble, you know, Australia, you know, Canada, probably New Zealand, you know, a lot of places, right? All of these phony baloney housing prices that we see on the MLS and realtor websites. I mean, all of that, there's no real earnings. There's no kind of positive economic momentum behind any of that stuff. All that is, it's just debt. And that has to be financed at ever increasing interest rates. It's just unsustainable. That said, you know, the old as the old saying goes, you know, from Ben Graham, Intelligent Investor, you know, the markets can stay, you know, I don't know, insane longer than you can stay liquid or whatever. So I'm not shorting anything. I don't really play that game. I just, you know, don't have debt, don't use leverage, and I'm paying cash for things like gold and silver. I'm not buying anything on credit. This stuff has gone down. Had I bought all this stuff on credit, I'd be paying, you know, interest and stuff for stuff that doesn't pay any cash and just kind of sits there. And so it's a dangerous time, and we need to be prepared. And I haven't bought really much gold or silver lately, but I do want to I did manage to pick up a couple pieces of junk silver here. This is a Canadian 80% 1966 Caribou quarter, of course 80% silver. I picked up this dime here. Now this isn't for me, I can't really read it, who's on the back of this thing. This is 1940, 49 or something like that. Maybe I'll be able to read it. Again, 80%. And this is not mine, by the way. This is my kids' little coin collection. I'm trying to get my children into, you know, buying a little bit of silver. Now, this is sterling silver, 0.925, and it's a 1920 25-cent piece. King George V on the back. Of course, really, really rubbed off and degraded. But you know what? Junk silver. I just wanted to get a few pieces, you know, show my kids that, you know, you do this over time. When I was their age, I was picking this stuff up, and it's done nothing but go up for the last, you know, so many decades. Of course, this I showed you guys back in the spring. You know, I got a couple Canadian half dollars, 80% silver, you know, for the kids' collections and stuff like that, and they're interested in it, and that's what it's about, showing your children, you know, I guess what real money, what true value is, things that hold their value over time. And it's, you know, you can see their little minds working, the wheels turning. They're like, hey, like this was like 50 cents in like 1962. And now it's like, you know, I don't know, $10 or something like that today. Like, you know, that's telling them something, right? And it's basically that, you know, our money has basically been devalued by 20 times since the 60s. So yeah, anyway, of course I got that Pant bar. What else I got here? I still got that Credit Suisse 5 gram gold bar. I'm just kind of, I got to pay off some bills right now. Like I said, we just got back from vacation, so I'm just kind of going to relax, going to pay off some bills. Gold and silver are falling in price, which is also kind of getting interesting to me. I did want to pick up a tube of 25 maples, and I'm just kind of waiting for the right price, right? And I think silver's going in the right direction to kind of get me to bite. Also, gold, I'd like to get another 1 ounce Canadian maple or something like that. Maybe one of the 5.9s with in the assay card. I have, you know, continuing to contribute, you know, to my investment accounts and that. And I've been buying these gold stocks. I bought a bit more Newmont last week. GLCC, it's a Horizons covered call gold ETF. So I did buy a bit more of that. I think I just kind of left some just in cash, to be honest, because I do think there's going to be a lot of bargains And if we get, so of course Jackson Hole's coming up too, towards the end of the month here. And if there's any more banking issues between now and then, or if they come out with a more dovish tone, I mean, that's going to send gold and silver screaming higher. The miners are looking oversold to me for whatever it's worth. And I do think, I was looking at Agnico Eagle. I mean, they're down as well, almost to where to the February low that they had for the year. So there's a lot of value to be had there, depending on what comes next. If we get a complete washout in the market, chances are miners are going to go much lower. But that might provide some real opportunity, right? That's the name of the game, man. Buy low, sell high. So anyways, that's all. I just thought I'd give you guys a quick update. Hope you enjoyed seeing some of that junk silver, and hope you enjoyed the talk. Right now, it's just sort of more of the same. It's just this waiting with bated breath, like waiting for, the inevitable to arrive. And the more I see the headlines, especially like some really alarming headlines, of course, China deflation, that was biggie. Japan, the yen being devalued, their bond market kind of breaking out, they had to adjust, their yield curve control and stuff like that, the band, all of this stuff doesn't really bode well. So then, of course, you got governments trying to refinance debt at ever higher interest rates. Where are the economic headlines? Where's the real pain? I think that's just around the corner, to be honest. I think it's going to be a really tough fall. And it's really hard to see. Like in times past, central banks have been able to intervene, and it kind of goosed the markets. One of these times, I don't know if it's going to be this time or not, but there's going to be a time when they're just kind of out of ammunition, out of gas, and it could be a real problem. And what if the rescue efforts fail? What if they can't stop collapsing debt markets around the world, just like dominoes, one by one by one?